What's up, everyone? So, in this episode, Bitfinex is being sued by the New York Attorney General's office. I think I think this whole recent situation is causing a little bit of volatility, but I don't think it's that big a deal, right? Always there is always this kind of stuff happening in the crypto space all the time. Either an exchange is involved. Usually, an exchange is being hacked, or they are operating fraudulently, and right now the exchange in question is Bitfinex, and of course so-called Tether is also involved as well. That's why the market kind of had a quick a very sharp sell down, right? Initially it was like going upwards around 5,005, then after that it had a really sharp correction back down to about 5,100, and right now it's recovered relatively quickly across the board. Now, obviously, if you are trading in US dollar tethers, this piece of news, especially if you got it relatively early, or there's that hearsay, a lot of the people who are trading in US dollar tether obviously got quite a bit of a shock, because imagine if US dollar tether was implicated, okay, and it's always been in question. What's the reliability of US dollar tether? And a lot of traders actually just use US dollar tether because it's just easier to get in and out of, and there's not many other pairings with other stable coins, right? As much as there are the Paxos, the USDC, there is the Gemini dollar, and even I think Huobi has HUSD. Sometimes people want that accessibility to a variety of cryptocurrencies, and if there's not enough cryptocurrencies, right? What happens is that if there's not enough availability of cryptocurrencies, it becomes very frustrating for people who want to invest in certain altcoins, or at least have access to it. Okay, so right now this whole piece of news, of course, caused quite a sharp sell down, but to me, as long as Bitcoin holds above $5,000, right? And even if Bitcoin did correct back down drastically to $4,000, okay, it is nothing new. It's really nothing new. It is just part and parcel of the market, and this is kind of the risk that we all have to accept, because a lot of all these companies are trying their best. Some are trying their best to function within the US, whereas some who were a little bit smarter already started to create the business outside of the US. For example, let's say if we look at Bitmax, right? Bitmax is run by Arthur Hayes, and he already started Bitmax outside of the US, because he knows that if you wanted to have full functionalities to really run a crypto exchange or a derivative product within the US, it's going to be a huge hurdle. And that was a very good move on his part, because he was able to really build this business freely. Now, obviously, that business is going to just gradually, that piece of the pie is gradually going to be shared amongst the existing exchanges, because now there are more derivative related offerings across the board. And we're talking about players like Binance, Bitfinex, OKX. They are all creating derivative-like products, and these derivative-like products are obviously Bitcoin futures, Litecoin, Ethereum futures, or whatever cryptocurrency that is based on the future price, or at least or at least reflects the underlying, or at least it kind of wants to reflect the underlying asset class. And you are trading purely either in BTC or in US dollar tether, whatever is available right now. I don't think there are many derivative products, because most prefer to actually speculate on the asset itself. But the only unique feature about futures contracts or any kind of derivative is always the leverage, right? Because when you can control or at least own a position that is 10 times your own initial capital or your own initial investment, the profit and loss is also leverage 10x, for example. So that is actually very appealing to people who know how to use leverage, and also a danger to the average speculator who is not very savvy and knows how to trade professionally, or at least has the know-how to do so. So right now, I think it's more of what is going to happen. I think it really doesn't matter, because right now, even if they are going to be sued or whatnot, it's going to be this long process, and then it is not probably the first time that this is happening, and I can assure you that these things happens in the banks all the time. Okay, it happens all the time, and sometimes it's just more of what's the severity and what are they after. Okay, so it depends, because right now when you read the articles, so we can go to the articles right now. About Bitfinex being sued. There's really nothing much, right? It just says, okay, of using illicit transactions to mask 850 million in missing funds. Okay, so what this story is all about is it's claiming, or at least the New York State Attorney General is stating that right now Bitfinex is covering a hole with using Tether. So the question is, how is it possible that they can do that? Because it's two different companies, but there's also speculation that the companies are run by the same people, and usually because they were having a lot of withdrawal issues, so Bitfinex users, right, or at least the staff, had to do withdrawals through their bank accounts. Now all this is not proven. There's no conclusive evidence that states that. This is just based on this article alone. So for those who are obviously a little bit more interested and they want to find out more, yeah, maybe you can go and dive deeper into forums and whatnot. But like I said, all these things are always part and parcel of the space. So which leads me to the next question, right? How are we going to progress? How are we going to really move it in? How are we going to move forward when we always have all these kinds of news, especially when you're talking about the main stable coin that we use in this space, that cannot find legitimacy because it's always plagued with all this bullshit? Or maybe it's not bullshit, maybe it's real, maybe because their corporate governance is not strong enough that they have to do stuff like that. And sometimes it's always a one-sided story. We always hear the bad stuff, and maybe these stories cause the markets to correct, or need or requires a much needed cool off, and it causes a lot of fear in the market. And when you cause a lot of fear in the market, it depends on who wants to take advantage of that fear. Could it be like, if let's say you saw this piece of news, you were in a Bitcoin position, for example, right? And it depends on whether you're long or short. Once the news hits, right, Bitcoin took a tank. So those who were in a short position, or at least anticipated that maybe technically it couldn't break past 5,007. I think I've mentioned that level quite a few times in my video, that 5,007 would be a very difficult level to break, right? And maybe people who decided to short then are enjoying the fact that Bitcoin really took a $500 dip down, and a lot of them are already on a 10x leverage, for example. That is a very nice 100% profit just on that trade alone. But for those who are just investors, for example, what is the sentiment? I think a lot of people are also concerned. So I think right now it's more of okay, so right now, let me see now. Do you hold XRP? Let's read the comments. Okay, shall I hold on to my US dollar Tether? Is Asia going to dump Tether when they wake up? It's not about dumping Tether, right? It's more of the fact that you are in an asset class. you can't you want to dump Tether, right? You have to do it via OTC. And right now, yes, the OTC market is actually very liquid. Okay, very liquid. But it's via OTC. It's not like you can sell US dollar Tether and get fiat. Usually most crypto exchanges in Asia, okay, are accepting Bitcoin, altcoins in general. I think they are playing with the news to create FUD. Yeah, I agree. They are, creating news. In news is part and parcel of this space. If you realize from the very beginning, right, everybody wants to trade on news. This is a this is something that is very not. It's not new. Okay, it's not new these days because crypto markets are very fast. Sometimes just a single tweet by someone influential or something significant like this could actually tank the markets. So that also goes to show that our market cap is still very small, and the liquidity, the order books are just not thick enough, and just a simple piece of news like that could just cause the whole market to take a shit. So until there's a better solution, right, you don't have a choice. It's not about whether you want to hold the tether or not, right? What choice do you have? You can always obviously just get everything out. Okay, and here's the thing. Right now, right, if you have this fear, am I right to say that exchanges also still make money? Because if you're in a position, you have to unwind that position because you're fearful, right? So you either took a loss, and then after once you took a loss, you have US dollar tethers now. Then you want to get out. My question is, how the heck do you get out? You obviously have to go and buy Bitcoin, and from there you take that Bitcoin and transfer out. So can you see how many transactions the exchanges have the opportunity to make at the moment? See? So no matter what, exchanges always make money, man. Fearful, good times, bad times, exchanges always start to make money. Didn't even get noticed. So yeah, man. Sorry, JP, I'm not really sure what you're talking about. What do you mean by didn't even get noticed? Okay, so do you hold XRP? No, I do not hold XRP. I've never bought Ripple before. I don't have the intention to buy Ripple, although there's a lot of volume, and I think traders occasionally do love to trade it. I'm just looking at the fact that the volatility is just not there. I mean, there is volume. Okay, Ripple always has volume, but it's just not that appealing to me. From a fundamental standpoint, it is just a fast TPS coin, right? And at the same time, obviously, sure, there are a lot of partnerships and banks potentially using the technology. But my question is, those who are more sophisticated will eventually use and create their own blockchain, right? They don't really need Ripple. They don't use the Ripple token, if you think about it. Like if Ripple was that successful, why doesn't JP Morgan come out and say, hey, I'm going to be using the Ripple token? It's not going to happen. The token was always just a sample. It was always the token, the native token Ripple was always like a test. Eventually, every single company, don't you see it? Every single company wants to create their own token. Nobody wants to use another person's token. They don't mind using the technology or at least the platform to transact because they don't know how it works. And after they realize, oh, okay, I can do it on my own, they'll be like, heck yeah, I have the reserves. Why should I let you start making the money? I don't mind paying you a consultation fee. I don't mind using your platform and trying to understand it, or having a piece of your platform just to keep you in check, just to see what you're doing. But other than that, I don't have to make you that rich, right? So they don't use the token. It's not like us. We have to depend on these platforms to either provide the service that they want to provide and it helps us, or we are investing in these cryptocurrencies because we believe that they play a strong fundamental role going forward, and perhaps it will help that particular industry that we are interested in. That's the only reason why we're investing in these tokens, because tokens, unfortunately, until now, do not carry any intrinsic value other than its ecosystem value. Okay, and that ecosystem value is usually not tangible. You can't put a numbered answer. You can't put a statistic on it. You really just can't, right? And that is the problem. And that is why if you say, if you're interested in EOS, if you're interested in Ethereum, if you're interested in whatever coin that you're in, what constitutes to the value? It's the same thing. Bitcoin is exactly like that. Okay, you can't say that the X amount of miners, or you can't say that the X amount of miners mining Bitcoin gives it that value, right? You can't say that all the miners that are and their equipment combined together is part of the asset that the Bitcoin network owns. You can't do that, because all these things belong to the miners. It is their tangible assets, not the Bitcoin network. Now, the Bitcoin network obviously has a different way of being valued. And until now, no one can clearly say that this is the exact valuation model that we can use to determine the price of Bitcoin. Please, by all means, comment below how you determine the price of Bitcoin, or if you have theories on why Bitcoin is at this price, or you feel that through your analysis, Bitcoin should be at another price, lower or even higher. Feel free to do so, because whenever I see John McAfee tweet or Mike Novogratz commenting that Bitcoin should be at this price, he's just adding fuel to the fire, because all of them are vested in a certain way, right? So where's the valuation, right? No one can give a proper valuation. When you create a wallet, for example, it's free, man. It doesn't cost you anything. At the same time, when you put a few satoshis into a particular wallet, there's no minimum requirement to hold bitcoins or satoshis in any of these wallets that you create. You can create 100 wallets and it's free. It doesn't matter. So where's the logic behind it? People are only interested because it helps to facilitate payment, okay, peer to peer. At the same time, it opens up a lot of access to markets that were previously not accessible to certain people or certain countries or demographics of folks, right? Right now, if you look at it, overseas lending becomes micro lending becomes a possibility, and it can be facilitated with lower costs. I wouldn't use the Bitcoin network, right? You will usually create another faster TPS, and your process of you have to verify the individuals that are involved, because you can't be lending out money, right, to these folks. You can't be lending out money to these folks and then you can't validate them. You definitely have to go through a KYC process. Bitcoin, on the other hand, because there's that level of privacy, you don't have to do KYC on any of these addresses. You just don't have to, right? As long as you know an address, you send money across. Same thing, you will just receive because this person sent it to that address. Simple as that. But when you talk about accessibility of markets, lending and whatnot, you can't do anything. You need to verify them. So that's how I see it. So right now there's a crack. Okay, so wow, okay, Snake, you seem very, very involved. So they want to crack down, guys. When you're watching, right, feel free to at least comment, because I think if I don't have any questions, the stream will end very, very quickly. Because if I don't have if you don't ask me questions, it's also very hard for me to reply. So let's see. BTC is valued for future appliance. No, look, this is the part where I've actually veered. Gradually, I am veering away from things that I cannot value. Okay, when I cannot value them, it makes no sense for me to put more money in. Like if I buy a property, I know clearly that I can rent it out. I know that over time, because of land scarcity and the fact that how property is being taxed in my country, I know that over time my property will only go up in value. Okay, this is something that I know. And when you talk about Bitcoin, if you say that Bitcoin is going to go up, why is it going to go up? Like, where's the real world demand? If you look at the recent news, let's see the recent news again. Okay, let me find an article by Rakuten. Okay, Rakuten is a Amazon-like it's a Amazon-like business. Okay, so they are now going to create their own crypto exchange. Okay, in June. See, everybody wants to get into the exchange game. Now, whether they actually launch it, nobody knows. They can always claim it just to get a little bit of attention to the brand, but then not go through with it. But then again, in this particular article, okay, they have already, it's going to be called the Rakuten wallet. And what what kind of cryptocurrencies are going to be used is another thing as well. At the same time, they already got approval from the Japanese Financial Market Regulatory, okay, or the FSA, right, the Financial Services Agency. So that's a good thing. So most likely they will go through with creating this, and it's a domestic exchange. So what does it mean? That means it only is able to operate within Japan. It cannot, it cannot. That means if you wanted to use Rakuten, you can't. It's only for the Japanese citizens. So I think it's a good thing in a way if this goes through, because like I said, people associate I think I did a tweet before regarding how would crypto actually gain mass adoption. And I think the highest rating, right, or the when I did the poll, was only when a big brand adopts cryptocurrency. When and of course, adopts can mean a lot of things. Either the merchants within its group of businesses are accepting Bitcoin. It is going to be transacting usually in Bitcoin, right? They just want to transact in. Everybody only knows about Bitcoin. No, not many people who are so involved in this space know all the altcoins that are available out there. Seriously, that's one thing also that you have to be very, very cautious, because when you think that your particular cryptocurrency is going to do very, very well, it's just appealing to you or that little community. And usually, like I said, all those communities, right, are questionable, because at the time, right, people were attracting, especially if they were doing ICO, people were attracted because of the free airdrops. People were attracted to the particular project not because they invested, but because of the airdrops during the campaign. So it's very hard to truly determine how big an actual altcoin community is, right? And I guess you have to see what the team is doing. When the team is actively building and developing, and they're keeping the community updated, I guess they feel that at the end of the day, it's worth my time. If you see some communities, right, and I'm not going to mention names, there are communities that are completely dead, okay? The CEOs or the executive team no longer even, they don't even bother to even talk to their community. Okay, that's the reality of things. And I think right now, it's the big boys that are coming in. Do you realize the big boys are coming in? So like I said, my focus is going to be mainly on custodial services, institutional traders. You're looking at insurance, and of course security systems. I don't care about anything else right now. I really don't, because everything to me is just noise. If all those things that I just mentioned are not built, you are not going to see the big money come in. And whatever you all want to say in the market, unfortunately, is just noise. And it's you want to really attract, you have the best systems in place first, and stop hearing shit about Tether is not reliable, there's lack of transparency, this exchange is getting hacked, this person died and then now no one has access to the coins. All this shit has to go away. As long as this shit continues to surface, we are gonna just be stuck in limbo for a long time, okay? Because right now, the exchanges are making the effort to create their DEXs and IEOs and whatnot. Sure, that's a little bit of adding a little bit of fuel to maybe a small fire, you know. But you want a huge fire. You need in order to have a huge fire, you need more money in the system, and more people right now, right, are planning to just park a little bit of money into Bitcoin. And if they feel threatened, okay, or they feel that their coins are going to be compromised, obviously they're not going to stay, and we're forever going to be stuck in this pathetic, less than 200 billion market cap, which could easily disappear overnight, okay? So right now, my focus is to focus on companies that can build it. So I either assist them, I want to provide advisory for them, and at the same time, let's see how we can help build this ecosystem. Everybody can do their part, guys. I think it's just more of being a little bit more mature about it, and not always think about trading it and making that 10-20% returns. That's really, it's fine, you know, it's fine, but you want to see sustainability, you want to see long-term growth. Yeah, so that's my thoughts. So anyway, guys, like I said, I think this space is going to be taking another 5-10 years really to really mature, and that is the part where you need to address that. So investing is my only main play. I only care about the long game. I don't care about what's happening in between. I already know exactly what I need to invest in. That's the good thing, right? And of course, naturally, you are going to be looking at a very illiquid market for some time. You think that it's liquid, but actually it's illiquid. Okay, you just look at the day-to-day volume and the order books of the majority of the cryptocurrencies. You know that there's not enough liquidity to go around. Okay, there just isn't. And the moment this space doesn't quickly clean itself up, because right now you need to identify which ones are the ones that you want to put your money in and be able to stay invested, and you want to quickly identify the ones that you don't want to invest in, right? You don't even want to touch it. It's like a disease. And that's the way it should be, because if you are not savvy, you do not understand, you do not know how to identify, I think that is the most dangerous situation to be in, because you could really lose whatever hard-earned money overnight, right? It's either stuck or it just goes to really close to zero. I don't want you to be in that situation, and that is why the channel was created, you know. But these days, I'm seeing a lot of newer crypto influencers, you know, that are coming into the space, and obviously they have better video editing skills and whatnot, which is cool, you know. But I just feel that the space is really not mature enough. It's not mature enough, and people don't understand what is required, and that's what makes it dangerous. And like I said, I think the young millennials in this space right now, they are below 30 years old. They don't have a lot of money. They don't have a lot of liabilities. They are not really too concerned, because like I said, maybe the nearest casino is not very nearby. And you know, these days, this is like the new casino. So if I can easily flip my $100 to make a $30 on top, why wouldn't I do that, right? It beats better than me going to flip burgers nearby, right? So that's the thought, that's the mentality. I know exactly how the youngsters are thinking these days, because why should I go and do hard work when the crypto market is giving me so much more? That's okay. You know, initially, that's how you experience the space. You speculate. But after a while, you want to create life-changing income or life-changing wealth. That's when you start to venture out. You need to become an astute investor or a savvy trader, right? You know exactly what needs to be done. You know that your risk management is the most important thing, and the type of asset classes that you need to get involved in is very, very different from how you started. And if you cannot answer all these questions, right, you really need to start finding information on how to, to become more knowledgeable in the space, right? And that is why actually when you look in my details below, we have all the courses available, and these are free, right? We have free courses, we have paid courses, and also we have masterclass in Singapore if you're someone who is interested, right? That is available from the 10th to the 11th of May. So these are the things that we do, guys. You know, these are the things that we do our best to educate. But like I said, it takes time, and for us, we are looking at focusing on the infrastructure. All right. Anyway, that's all for the stream. See you guys in the next one. Nothing much, guys. Just stay firm. Okay. See you guys.